It's great to have you back on the show, Tom. So it's hard to read something like this because there's clearly a discussion going on at the Fed about whether they could overdo it, whether it's time to pull back on some of the aggressive interest rate increases. But at the same time, there's a discussion on how worrisome and high the inflation numbers really are. So what do we make of that?
Well, frankly, that's not unusual for an FOMC meeting, in my opinion and my experience. And I would tell you, as you read through those minutes, and you have to do it quickly, I realize right now, but as I've read through them, there's a pretty much unanimous agreement, though, that inflation is the top priority. That it's still, at that point, it was too high, and that was their priority. And then you get into it, and they begin to talk about the fact that there is a slowing in the economy. When you get the regional reports from the participants, there's clearly indications that things are slowing, and that should begin to mitigate some of the inflationary pressures. Also, some discussion of labor and wages. This was before the big announcement, but still a feeling that might come more into balance, and the fact that the economy broadly was slowing, that gave them, I think, a sense that they were on the right track. And I think when in that environment, then you always get those who are very concerned that it may slow down more quickly. And so you say, well, maybe we shouldn't go quite so fast and so forth.
Right.
And I think Powell made it clear in his press conference, though, that they weren't giving forward guidance, that 75 wasn't necessarily on the table, 50 basis points maybe. And that's kind of a sense you get from the minutes that you're going from there. And so I think flexibility is a big deal. And so they're going to have discussions about, well, we don't want to go too far. But the real test will be, I think, down the road as the things slow and these voices of, well, we don't want to go too far become more prominent. And will they then stay at a rate of, say, if they get to 4 to 4.5%, will they stay there or will they back off if employment starts to hide? So the challenge is still ahead. And these minutes are pretty not surprising.
Well, on that, the market is excited about the fact that they will pivot eventually into next year. The S&P is up 8-9% since the last Fed meeting. Is that too enthusiastic about what's coming?
Yeah, I think it is when you have inflation still at 8.5%, and they're still going to be talking about increases, I think, through the end of the year. They may be a little bit ahead of themselves, but they are counting on the fact that next year, even if inflation is still elevated, that the Fed will become more concerned about the economy and employment, and they'll back away from that. And I think that's what the market's counting on. And these minutes would not dissuade them of that, in my opinion.
There were 14 mentions of inflation on the Target conference call today. There are problems with food and wages, and some of these categories, Tom, are proving stickier than others, especially food, wages, and shelter. Does the Fed need to see all of those things come down before it pauses?
I think it should, and I think it will, unless unemployment starts to rise quickly. Then it'll become a real contest within that FOMC. But clearly, inflation's embedded in this economy. That's coming through pretty loud and clear. And the Fed knows that if they give away too soon, if they back off too soon, they're going to have even a bigger problem on their hands. So they say inflation's first, but to keep everyone kind of on board, I think this idea of flexibility and the look is what the chairman's kind of putting out there. But he knows that they have a big road ahead of them still.